All right, so this is going to be a very important video lesson. I hope you watch it all and maybe even watch it several times. Yesterday, I wrote an article for Huffington Post called 10 Steps to Becoming a Stock Market Millionaire. And I include just some basic lessons. I'll link it on the bottom of this, but you need to focus on hot stocks. You can both buy and short sell. When you're wrong, you have to cut losses quickly. Don't be afraid to take partial or even all profits. Embrace new technologies. Stick with liquid stocks. Don't believe anything the management says. This was actually a typo. Don't diversify and don't use leverage. You don't need to buy the exact bottom or sell the top. And always, always, always make a plan before you trade. And I'm going to give you a few examples of several recent trades and plans and successes and mistakes. First, I want to start with this guy, Darren. He is a student and he bought Tim Grittani's DVD, shorting CANF into resistance and 8% gain after commissions. So I brought up CANF in the chat room mainly because I was watching it around 11 a.m. An hour ago, 11 a.m. Eastern. And people were like, oh, Tim, buy it. It's in the 240s. And I'm like, why would you buy it in the 240s when there is long-term resistance right here at 250 and a ton of resistance in the threes? And then if you do any fundamental research, this company has very little cash. You know, it's been promoted in the past. It's not a play to chase. And you have to understand where the resistance is. And Darren watched Tim Grittani's DVD, which, by the way, for the next 3 days is 45% off. I'll link this. All the DVDs are on sale. This was our going back to school sale. So I highly, highly, highly encourage you to take advantage of this. And Tim Grittani's DVD features over 35 trades, live trades. And his most popular strategy is shorting into the morning resistance, which was CANF. And a lot of you guys just aren't understanding that. So I put some commentary, some pretty brutal, truthful commentary saying CANF is a piece of shit. I have no ideas why you insist on buying random biotech. My guess is you like the action or thrill. And I followed it up because I got a lot of questions and I said, let me be very clear. Buying a biotech earnings winner early near the market open, that's fine. Okay, CANF was a solid buy at 220, but never chase midday. And really, you know, I don't think that it's even a short here when it was in the 230s when I posted that, because it's kind of mid-range. If you want to buy it early near the market open and try and get a morning spike, that's cool. You know, buying it at 215 or 220, you know, you had a nice 30 cents of upside here and 40 cents a share of upside. But don't expect these spikes to keep going. It is so important for you to see where resistance is. It's not a coincidence that in the morning pre-market, you know, it touched 265 and touched 265. And if you go back and look at resistance over the past 200 days, you know, right here, 290 is going to be a top. Right here, 295 is a top. Right here, 288 is a top. And right here, 255 is a top, and 250-ish is the top. So you have tops everywhere here. So why are you chasing a biotech on the hope that, you know, this is going to keep going? Do not hope. Do not hope. And Tim Grittani has proven, you know, he's the single most successful trader in the world, going from 1,500 to 2.8 million in the last 4 years, mainly shorting into failed morning spikes. Remember, MXWL was my dip buy yesterday, and it was because, you know, it had resistance here, or, you know, multiple resistance points here at 610-ish, and then when it tried to bounce here, 610-ish, and then today it's even lower. Because if you look at the longer term chart, there is a ton of resistance right here in the mid sixes and right here at 630-ish. So you have to look back at past resistance and don't expect any of these stocks, no matter what the news is, for them to break that past resistance. Every now and then it'll happen, and if you're shorting, you know, you'll cut losses if there is a breakout. But the vast majority of the time, shorting into morning strength, that is a strategy, and Tim Grittani has perfected it, and that's not my strategy, and that's why I can't encourage you enough to watch trading tickers as opposed to my stuff. We all have different strategies. Even though we play the same stocks and the same kinds of patterns, we are better at different patterns, and that's why we all teach. So Timline is also 50% off. It's just $400, and I break the day up which a lot of you guys don't understand. Like different parts of the day requires different trading. You know, I trade very differently at the market open compared to midday or in the afternoon. I'll give you an example. Today, I screwed up. I'll admit it, LAKE at the market open was spiking, and I quickly looked at the past resistance chart here, and I don't know how, you know, you can see that there's resistance here at 1275, but for whatever reason, because it was the market open and everything was happening so quick, I thought that this resistance was 13. So my buying it at roughly the current price, 12, I think I got like 1220-ish, 1225, I don't know. You know, it hasn't really budged from where I bought it, but I mistook where the resistance was. I thought this was resistance at 13. So my buying it in the 1220s gave me 80 cents of upside. As it turned out, the resistance is 1275 and it actually hit 1275 today. So the resistance held. And, you know, that was only 50 cents of upside. I never would have entered in the 1220s if there was only 50 cents of upside. Even though it's an earnings winner, you know, the volume isn't that great. The sector used to be hot when Ebola was very scary, but Ebola isn't really scary these days. And, you know, I totally bombed by looking at the wrong number for resistance. So I'm sorry about that. I apologized in the chat room profusely. It was, though, a good dip buy in the 1170s because in the 1170s, now you have $1 of upside and not much risk because it's already $1 a share off of its highs. So look at LAKE today. So we tried to do a morning spike, and that's what I was trying to go for, but it ran into a wall of sellers in the 1270s. And I saw that and exited. Again, I'm sorry, you know, but in the market open, right near the market open, I'm going to trade very quickly. If it can break out, then that's awesome because I called the breakout. If it can't break out, I'm going to get out very quickly and protect myself. The play would have been to buy it anywhere here in the 1175s, and now there's 50 cents of upside off of the morning lows. So whether you want to short into the morning stuff or dip buy, earnings winners really can keep going. And I had to remind people of this. I tweeted, you know, always know the potential of earnings winners. VRA, TITN, LAKE, BEAT, Ford. Every now and then, you know, I'll mess up. And I can't remember the last time I mistook the resistance level. You know, that was just a mistake because I was rushing near the market open and I wanted to get, you know, my buy and alert out before I thought it could run more. But most of the time on all of these plays, I profited because earnings winners can run for several days, even several weeks, if you remember and you read this blog post. So I do like earnings winners, but if I'm wrong, if the breakout fails, I'm going to get out. And whether I make, you know, I made a few $100s, whether I make a few $100s or lose a few $100s, I am wrong. Okay, and I know that's confusing because a lot of you are judging the success or failure of your trades based on your profits, but if you make or lose a little bit amount of money, it doesn't matter, okay? It's not going to make you rich. It's not going to make you poor. It's a scratch. And the whole philosophy and idea of the scratch is, you know, problematic for people. They can't understand that sometimes you're just going to have to take a loss or take a small gain and just exit when the price action isn't doing your thing. But out of all these stocks, you know, I had some small wins, small losses, but I had a huge win on Ford where the stock nearly doubled from my buy alert over the next 24 hours. So if you have scratches on, let's say, 4 stocks like I did, and you have one big win, you're up overall pretty damn big. And I know it's frustrating to have a scratch, but that is my strategy. That's how I've gotten rich. And you ask Tim Grittani, or you look at Tim Grittani's trades, and you look at Michael Good's trades. I have to show you this actually for a second. This is a good example. Good trades. Ugh, he has like a weird browser issue. Is it down really? Okay, good. Michael is interesting with his website. But look at this. This is a perfect example of, look at this, $50 gains, negative 400, plus 90, and they're all the same for pretty much the past 2 weeks. And then look at it. He has a $25,000 profit because he nailed shorting this pump and dump. So Michael, he's my first Millionaire student. Go and look at all of his trades. I think it's like 1.5 million in profits. Lots of little gains and lots of little losses. Those don't budge the needle. This does. And this is very similar to how I trade, where I have lots of small gains and lots of small losses. But I have some very big gains, and that is what's going to make you rich. So if you get in early when there's breaking news, like I did with the billionaire play VVUS or the billionaire play AQXP, understand that there's an early part of the trade, and where if you find the breaking news, it can run a little bit as other people start realizing it, but that's not always going to guarantee you a breakout. My big play on FORD was buying it after it had already run, and I dip bought it. So I wasn't first. I was playing the next part of the trade, which is a dip buy, which is often sometimes the best play. AREN, Michael Good was not the first to short this at 38 cents. In fact, the pump and dump was pretty much over, but he held for 2 weeks and he made 25,000. So you don't always have to be first. That's just one part of the trade. And I'm getting a ton of questions about James Altucher's new newsletter. I linked to his free video explaining what billionaire plays are. And he has this great, great new newsletter, basically identifying billionaire plays and hedge fund plays early. And I talked about this on my challenge webinar last night. But a lot of you guys are confused. Let me cut through all the confusion and all the copy here. He's had a lot of big wins in the past. He's written a book, Trade Like a Hedge Fund, and now his newsletter is going to be, kind of taking advantage of how hedge funds and big VCs and billionaires invest. And I'm getting to the bottom of this because this is the coolest thing. You can try his newsletter for 6 months. No one else is offering a 6-month money back guarantee. There's a lot of people who are like, oh, his story sounds too good to be true in the chat room last night. And I was like, I know James. He's had some big wins. He's had some big losses. He's gone broke a few times. He's also made $10 million inside of a year. He is out there. And I think he's absolutely mad to offer his newsletter risk-free for 6 months. But the beautiful thing is that you can try this newsletter and you'll see if it's good or not within month 1, month 2, month 3, month 4, month 5. And then you can cancel if you're not happy with it. And theoretically, the profits from his picks will pay for all of his newsletter and more. And not to mention, because this is his first ever newsletter as opposed to just running a hedge fund, he's giving you a second year free. So if you do like the newsletter and you buy it now, then you get basically 2 years. And if you don't like it, you don't have to pay anything as long as you cancel within 6 months. And I was going over this in the past back in my challenge webinar last night, but I wanted to show you some of his past picks. PIP, he wrote an article about this here in the ones, I think it was for Seeking Alpha, and it tripled within a few weeks. It wasn't like instantaneous. This is a 5-year chart. And it held up there for several months, even though PIP, eventually their drug didn't take off. But it was a triple if you recognized his wisdom and insight and being early in the trade. And he also wrote an article about VRNG right here when it was in the ones and how they were suing Google over AdWords. They eventually won 30 million, but then they lost the appeal. And as you can see, it eventually went down. But if you got in when he initially wrote about it, it was a triple over a few months. So those were, a few years ago. These are just a few examples. But if he has even one of these kinds of picks, I really think that his newsletter is going to be more than worth it. And that's why I am personally buying this. He's not giving it to me for free. I'm going to buy this so I can kind of see, is this newsletter worth it? And we'll see how his picks do over the first few months. But I'm willing to give it a try based on his past picks. And I know he has tons of connections. I used to do videos with him at thestreet.com, and he's literally insane. If you've ever read any of his books or watched his videos, insane in a good way, not like a dangerous way. He just doesn't care about making the most money. He cares about being a good person and providing a good service and helping people. His book Choose Yourself is one of my favorite books. So that is James Altucher's newsletter. But I want you to see that there are many different patterns to play off of. It's not just, is this stock a buy or a sell? Most people think like that with the stock market, and that's not the key. Again, going back to my whole article here of 10 steps to becoming a stock market millionaire, it's always make a plan, okay? This is the most important. And you need resources, and you need help, and you need mentorship from people like James and Tim Grittani and myself, because we've all made millions doing different patterns. And you can look at our trades and you can see what we do right. And sometimes I'm going to screw up like I did today. but by learning from millionaires, self-made millionaires. None of us were born rich. I should mention that. There are some trust fund babies out there, and they get a lot of money and they're popular on Instagram, but they haven't really done shit on their own. But self-made millionaires, Tim Grittani, me, James, we all started with very little to nothing. And if you can learn from our successes and our failures, then you can develop your own plan. Whether you want to buy early on an earnings winner, sometimes be wrong. If you want to, buy a billionaire play and be early, or even dip buy it like VVUS, it was actually better to buy on day 2 or day 3 of the news rather than when I initially bought it, even though it spiked 50% over 3 days. Or you can, short sell, and you can, when a stock fails to break out, like Tim Grittani loves to do, short sell into resistance, and you can make money that way. But just learn all the various angles and see which angle works best for you, and try to make the most and learn the most. So that is today's video lesson. I will see you guys in the chat room, and I'll post links to this article and James's newsletter and Tim Grittani's DVD sale too, because I think they're all must reads and must watches. Bye.